In 2030, you have 100 shares of Tesla stock in your possession. But what if I told you that these shares could lead to a fantastic financial journey? Today, we will unravel the enigmas surrounding Tesla's future. We'll explore the possibilities in great detail, look at a number of scenarios, and even get a close look at some cutting-edge technology that might fundamentally change the landscape of the stock market. Tesla has become well known in areas like autonomous vehicles and renewable energy, but what lies ahead for the company now, what may push Tesla's stock to previously unimaginable heights? Will it be completely self-sufficient technology or perhaps something even more innovative? We're going to take a trip through time and numbers, so buckle up, everyone. It's going to be an interesting journey finding everything that is out there. We'll analyze the options, look at Tesla's potential stock values in 2030, and maybe even find some undiscovered treasures on the company's stock market prospects. Remember to subscribe to Tesla Stock News and hit the like button. But first, let's get going. As per the video, the current value of a single share of Tesla stock is $217. A $100 share investment would cost $21,700 and $700 in total. The real question that has to be addressed today is the potential 2030 value of those 100 shares. We've made a chart with Tesla's stock estimates for our long-term investment horizon. This chart displays 4 possible outcomes base, ultra bear, and ultra bull scenarios. There are 2 charts, one with and one without FSD licensing and revenue. Notably, robotaxis and insurance are not included in our analysis. Instead, it focuses just on Tesla's main business segments: energy, automobiles, FSD, and licensing. Now, let us examine the scenarios. First, we anticipate 10 million vehicle deliveries in the extreme bear scenario with an average selling price of $30,000. The base case estimates 15 million deliveries at a cost of $26,000 per vehicle. 20 million deliveries in the bull scenario are projected to cost $23,000 each car. In the Super Bull scenario, we are discussing 25 million deliveries at an average cost of $20,000. It's important to keep in mind that in order to increase sales, Tesla might need to offer more affordable vehicles, which could have an impact on profits. Is there anyone else who shares our optimism over Tesla? Our Search Alpha friends. Simply seeing Tesla's incredible ascent from the sidelines is insufficient. For the most up-to-date information on Tesla, Elon Musk, stock price targets, innovation, and all things linked to Tesla, Seeking Alpha is your one-stop shop. Seeking Alpha is the best source of news on Tesla on the internet for enthusiasts of the firm and investors who are looking to scoop the next big thing in the stock market. Get the truth without giving in to the anti-Tesla rhetoric of the mainstream media. Click the description link to get a special Black Friday deal. According to our projections, by 2030, all car scenarios will have an operating margin of 20%, which represents potential cost reductions from better material sourcing and economies of scale. The following are the equivalent profit figures. Let's now discuss the energy industry. We project that we will continuously produce $90 billion in sales with an operating margin of 20% by 2030. On the other hand, services are less predictable and depend on factors like the number of Tesla vehicles that require upkeep and replacement. Revenue is estimated to be $39 billion in the ultra bear scenario and roughly $100 billion in the ultra bull scenario, assuming a 20% operating margin. In the base case, revenue ranges from around $700 billion to little less than $500 billion in the ultra bear scenario. Combining these elements reveals an interesting difference in revenue between the hyperbull and bull cases. However, this can be mitigated by Tesla altering its business approach in the future. The future worth of Tesla's shares is a complicated topic that is essential to the success of the company. Thankfully, our colleagues over at Seeking Alpha are here to make your Black Friday experience even more memorable with a special offer. They are a great source of information about these and other challenging topics. See the description for a link to a Black Friday offer. Indeed, Tesla's future success will depend on a number of factors outside automobile sales. Rather, the quantity of Tesla vehicles on the road, combined with FSD and other services, will be significant revenue generators. FSD in particular is anticipated to become a significant element of Tesla's core business, along with energy. By 2030, we estimate that net income will range from $96 billion in the extreme bear scenario to $139 billion in the extreme bull scenario. Given their high net income predictions, it wouldn't be astonishing to see Tesla take share buybacks into consideration in the following years. Let's discuss current stock prices and the projected value of your 100 shares in 2030. For each case, we have employed a price to earnings PE ratio of 30. In the most extreme bear scenario, the market capitalization of the company is estimated to be slightly less than $3 trillion, or $884 per share. A market capitalization of around $3.6 trillion and a stock price per share of more than $1,100 are anticipated in the base case. A bull market would see shares trading near $1,300 and a market capitalization of more than $4.1 trillion. The Super Bowl scenario also projects a stock price of more than $1,300 a share and a market worth of more than $4.2 trillion. Lastly, a market valuation of almost $4.2 trillion and a stock price per share of little less than $1,300 are projected under the Ultra Bull scenario. As a result, the eventual situation will dictate how much your 100 shares are worth in 2030. It's clear that factors other than auto sales will determine Tesla's success in the future. In any event, it has enormous growth potential, and its increasing focus on FSD and other services will only serve to fuel that growth. Tesla is positioned to be a significant player in the quickly evolving automotive and technology sectors with this diverse approach. Seeing Tesla's incredible revenue numbers and the potential for significant gains is incredibly thrilling. But what if it were able to foresee who will become the next high-profile Tesla? Let me now present you to Seeking Alpha and their special powerful tool. It's possible that you can identify top stocks with solid long-term growth by using their stock screener. Think about the chance to locate the next Tesla before the market blows up. As we analyze Tesla's latest moves, remember that Seeking Alpha might be your first stop when looking for the next big investment opportunity. Don't miss out on this special Black Friday offer. Check out the link in the description. Your 100 shares would be worth approximately $88,400 in 2030. Instead of the $21,700 they are currently worth in the worst-case scenario. This is a profit of over $68,000. In the bear case, 100 shares would be worth $120,000 instead of the present value of $21,700, resulting in a gain differential of more than $88,000, assuming a stock price of $1,200 in 2030. In the base case, 100 shares would be worth over $116,000 in 2030, yielding gains of over 94 times. Under the bull scenario, 100 shares would have returns exceeding $108,000 and be valued over $130,000 in 2030. Finally, assuming an extremely bull market, 100 shares would be valued at more than $118,000 by 2030, signifying gains of around $97,000. For these projections, Tesla's energy and vehicle divisions have been compared using a price-to-earnings ratio of 30. Now let's look into a scenario that seems more likely. By 2030, Tesla might be able to create 13.5 million cars at an average selling price of roughly $33,000, which would generate almost $450 billion in income from car sales. Services revenue is expected to be slightly above $53 billion at the same 20% operating margin as energy revenue, which remains stable at 20%. This translates to $588 billion in revenue and approximately $118 billion in net income. With the same P/E ratio, this would translate into a market capitalization of more than $3.5 trillion and a stock price of $1,087 a share. Approximately $96,000 in gains would result from comparing the value of your 100 shares at $21,700 today to their roughly $118,030 today to their roughly $118,030 value. This projection is based on the assumption that Tesla will continue to grow its automotive and energy divisions. Even if we reduce the operating margin to 10%, a more cautious estimate, the market cap would still exceed $2.1 trillion at a share price of $1,776. In this instance, your unrealized gains would still be almost $50,000 if you bought your 100 shares now. It's important to keep in mind that these estimates do not account for Tesla's complete autonomous vehicle business. When FSD is considered, there is a significant rise in the potential for growth in both revenue and profit. Included under FSD and having a significant impact on Tesla's overall financial performance are global revenue and licensing. Even under the worst-case scenario, FSD alone could bring in more than $570 billion in revenue and make more than $164 billion in profit. Applying a P/E ratio of 30 to the FSD inclusive scenarios results in stock prices ranging from $1,515 to over $2,200 per share, with market capitalization close to the trillions. Depending on the situation, the value of your 100 shares in 2030 might be anywhere from $151,000 to over $207 to over $217,000 to over $217,000.